Look, 2.4, 2.3% in the 10-year. Do you think that cushions the blow to the U.S. economy from the trade drag that could be half a percentage point?
No. The Treasury market's rallying in large part because of weaker growth. It was rallying before the trade situation broke down late last week. We saw inflation expectations. We saw real yields, Kelly, real yields down sharply from last fall as the market was discounting softer growth. And the curve steepened a little bit only because the market now, rightly so, is predicting an easier Fed. So while China and U.S. Trade negotiations are certainly the cause du jour, a lot of the semi-sector was weak. We're seeing a lot of weak trends in CapEx, and the economy was slowing anyway. And this, again, was before all the trade battle, and therefore the Fed needs to reverse at some point.
So you mentioned that now they're expecting an easier Fed. So we have tariff hikes, which are going to create short-term price pressures, and all the speculation is going the other way. I think the prospect of a cut by the end of the year is back in the markets, Joe. I mean, we got a 3.2% first quarter GDP, maybe a 3% for the second quarter. And the expectation is we kind of just fall off a cliff from here. Is it possible it's not going to be as bad as everyone seems to think?
Yeah, I mean, it's possible. Same thing happened, though, in late 07. The economy looked really good and things kind of rolled over quite quickly. So it's definitely possible. I mean, as Leeson was saying earlier, I agree with him on this, which is this is all disinflationary. So the Fed can't get 2% inflation now. So they have to try to lift expectations to get inflation higher to try to then ease at some point whenever the recession invariably occurs. It's not yet, but somewhere down the line.
Yeah, Rick, they're in a kind of an interesting situation, and maybe they can just kind of happily stay on the sidelines. But I think your point about the pressure this puts on the administration is an important one. They've been very, very quiet today. We know how the president feels about this. And if the goal is to get China from stopping to steal our intellectual property, for example, I haven't heard anything all day that gets to that outcome, tariffs or otherwise. I mean, what are some other options here that the market should be thinking about?
You know, markets aren't made to think about foreign policy, and in terms of options against China, this many years into the WTO arrangement, you need leverage. And there's not a lot of ways to get leverage, and it will be messy. I guess my final thought is that I think that Jay Powell's going to look at this much more objectively than the markets. You know, whether it's risk parity traders when volatility's high, selling stocks, there's a temporary feel to this that we all know is there, even though it's a bit scary when it occurs in real time.
Temporary, Rick? Is that because of the outcome of the talks, or just because, you know, it's the market?
I think that the outcome is a deal. It's just a question of how ugly it has to be before that deal occurs.